Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the weekly market review for the week of January 29, 2016, the last Friday of the month. Curiously, with the flat markets we've seen in commodities as a whole, it's kind of interesting to review where we've been so far in 2016. March corn is up about 13 cents, December corn up 11, March soybeans up 17, November up 9, got July wheat up 7 cents for the month, cattle down about $1, hogs up $6 the winter so far, crude oil down nearly $5 a barrel, which is well over 10%. And the stock market down more than 1,000 points, or 6% month to date. So obviously a lot of macro involvement in the market currently since the first of the year. Keep in mind in December is when the Fed increased the interest rate here in the U.S. on money. And you still have monetary policy in the world that's having influence on the macro markets. The Bank of Japan this morning, in fact, went to a negative interest rate for the first time in a long time, if not ever, and you continue to see that process in most parts of the world other than the U.S., so that continues to keep some pretty good strength in the U.S. dollar going forward. And when you look at commodities, that's a driving force on the long-term thoughts on commodities. Now, this afternoon, looking at grains, the Commitment of Traders report, which is through the 26th of January, this past Tuesday. During that week, funds, which are still short 87,000 contracts, liquidated 71,000 of those shorts last week. In that whole move of that short covering, the corn market basically is within a penny of where it was to start that week. So obviously a huge change in ownership. A lot of that may be due to the funds getting out, and also commercials covering hedge positions on movement out of the country. So we probably have seen decent producer movement to some degree, helping to offset that in the corn. Beans, funds actually added 4,000 new shorts, and the total right now is at 30. Wheat liquidated 19,000 of the shorts, but the funds are still short about 50,000 contracts. So in a nutshell, Commitment to Traders reports still show the funds have short positions, but nothing like we saw earlier this month, especially going into the January crop report. Speaking of which, since that January crop report, keep in mind corn's up a little over 20 cents since that report came out on January 12th, which that report wasn't necessarily really bullish looking in hindsight, but it did seem to give the market a little stability going forward. So as we get into February, and kind of an important month for prices as far as crop insurance is concerned, something to keep in mind going forward. But February typically is a very quiet, grinding market, especially here of considering the way the market's been here the last several months. Currently, March corn is trading almost exactly where it was a year ago right now, with the March of 2015. But looking at the volatility in these markets, 2015 had this lowest volatility in corn, beans, and wheat that we've had going back to, I believe, 2006. Crude oil, lowest level earlier this month since 2002, along with the CRB index, which would be your commodity index, lowest level since 2002, obviously helped by that cheaper crude. And talking to folks in Chicago we talked to, and things you read, participation by the funds as far as dollar amounts and activity in the market is the lowest in several years. So throw those all together until something changes, some black swan event or something that changes the supply mechanism or the demand in this market. Things look to be fairly quiet and choppy going into the spring, in our opinion. Cash markets, again, reflecting earlier, mentioned it seems like we've seen a little pickup in cash trade here over the last few weeks. I think depending on where you're at, that has been the case. I think we've seen more movement in the Western Corn Belt than in the Eastern Corn Belt. both on corn and beans, somewhat reflected by basis levels as the Western processor, as a general rule, has dropped about a dime in corn basis over the last week, and then here this afternoon, Friday afternoon, we actually seen a bounce of about 2 to 4 cents in the local basis, even with this higher corn market today, which is interesting. Some of that may be predicated on snowstorm coming into the Western Corn Belt middle part of this upcoming week, about Groundhog's Day actually. And that may have some influence on logistics as far as rail movement, truck movement, and so on. So that could be the spur of that little bounce in basis here on Friday. Eastern Corn Belt, you're still seeing some strong basis, especially in Indiana and Ohio, where you're seeing basis levels something over 30 over the March, and in comparison to basis levels in the Western Corn Belt at 30 to 40 under or more. Obviously, there's a huge differential there that the rail market needs to address going forward, and we have seen some rail movement in that direction. Spreads have widened a little bit over the last week with this weaker basis. Bean spreads have widened from an inversion a week ago to a slight carry, so they've moved 3 to 4 cents. I think we've seen the nearby corn spreads widen about a penny. Getting back to the beans, we're starting to see bean basis, especially in the export trade. The river market's starting to fade slightly. That may be showing signs of the slowdown in the U.S. bean business, which, from an export point of view, from what we're seeing, most of the forward contracting by the Chinese seems to be into Brazil in this late February, March time frame and forward. And then as you get down to into April and May, they're also adding Argentine beans into the program. We did see a cancellation of about 350,000 ton of U.S. beans this week to China. Some of this may be switching some origin from the U.S. to South America. We had an all-cattle report this afternoon. It came in at 103.2. That's about 1% higher than what the trade was looking for. That could be a little bearish. The cattle, that number could be a little positive if you look at it from a feeding standpoint, as in a little more cattle on feed than a year ago by 3%. Annual calf crop at 102.3. All in all, though, going forward into February, unless something changes, we're still in a very range-bound market. It's testing a lot of patience with producers still holding grain on the farm. You'd like to think as we get closer to the growing season, there may be a little spur in volatility and see bigger changes on a day-to-day basis or week-to-week basis in these markets. We'll see. But going forward over the next 30 to 60 days, demand's going to be the focus, and we're in a time frame where exports tend to start slowing down, moving to the South American crop. We continue to see limited margins in the ethanol industry right now. We did see a slowdown of production on the report this week. So the demand side's just kind of trudging along with not much, not really impressive at this point. We'll see if that changes. Anyway, if you have any questions, feel free to call us here at BIS Commodities. Phone number is 800-373-2525, or catch us online on biscommodities.com. Everyone have a great weekend, and we'll hope next week's weather is not as bad as the weatherman is predicting. Thank you.